Welcome back. Mark Bertoli joining us from Abbott Wealth Management. Happy Wednesday to you.
You too.
Yeah.
Great to see you back in this chair.
It's great to be back in this chair. It's been one of those, well, summer holidays. Everybody's away, so everybody fills in for everybody. But yeah, it's great. You've been enjoying your summer?
Absolutely.
Good.
Yeah.
Good. We're talking today about the U.S. housing market.
Yeah.
And how things are looking to the south.
So, you know, I started looking at a couple of we don't have a question today because there was a couple of things that happened that I thought would be a great learning experience. So, what's going on around the world that truly affects us as investors in British Columbia? So, one of the things we looked at was the U.S. housing market. So far in June, they had the biggest 1 month gain in 10 years, up 9.8% in new housing starts. It's interesting. We're on pace for about 1.2 million housing starts a year in the U.S. right now. The other thing is builder confidence is up to about a 9.5-year high. So those numbers date back beyond the 2008 correction. So very significant stuff. I actually sent over a chart that we can bring up here for a second. And this goes back to about 2005. And you can see that there was about 2 million housing starts per year back then, and now we're back up to about 1.2 million. So interesting. What you've found in the States is that a lot of people pre-2008 owned secondary residences. So they'd have a home where they lived and worked, they'd have a condo in Palm Springs, Palm Desert, in Scottsdale, or, you know, Mesa or somewhere like that. What you've found lately, though, is a lot of those condo complexes where they used to be 80% rentals, 20% residents, are now 20% rentals, 80% residents. So that cycle will return. That cycle will go back to where people feel good about their jobs, the economy, invest in secondary properties, and then, you know, the rentals will be back up there, and therefore that's how that housing starts goes back up. It takes about 1.5 million houses a year to replace falling down houses in the United States, immigration, population growth, hurricanes, and everything else that happens. So really it's been infill when we're below the $1 million housing starts a year index. So the next thing I looked at interest rates. 30-year mortgage in the United States, and in the States, you lock in for 30 years, 3.85%. So I said, wow, that's interesting. So I phoned Greg Peace, a buddy of mine at Mortgage Alliance, and I said, well, how about Canada? 30-year, but you only lock your interest rate in for 5 years, and then you have to kind of get what you get. But we're at 2.64%. So very interesting. So
how can the United States offer a 30-year mortgage at the same rate for that long?
Well, how
does that work?
I think that shows great confidence in that we're going to be in a prolonged period of low interest rates, right? They're very careful with that for sure.
Yeah, because ours is low. Ours is low for sure. It's never been lower. I mean, we can't go any lower, really.
But if the market goes up, so will 5 years later, so will your renewal.
Right, so, exactly. We have about 30 seconds. I know that we have more to discuss still.
Right, so the next thing, exports. And here's the lesson. 3 weeks ago, the markets, there was a lot of news in the markets, Canadian markets going down and everything else. And we had questions. Should we be selling Canada? Should we be moving more money out of Canada? What's going on? Well, then we turn around, we have a low dollar, and we have one of the best export months in a decade last month.
But that's inevitable when you have this low of a dollar, right?
Right. Every American dollar has $1.31 worth of buying power in Canada. So it's a good lesson for people, and for people who got out a week ago or moved out of Canada. Canada's probably been one of the best performing markets over the last 15 days. So great thing. The other thing is floating currency. Greece cannot lower their currency. Canada, we've lowered the value of our currency, so we're attracting investment. Our manufacturing's taking off. It's good for tourism, good for Americans. I don't doubt that we're going to see Sunpeaks take off again with Seattle buyers again, like in the 90s. So there you go. So
there are some perks to a lower dollar. It's not all good, but certainly for exports and for tourism, there's certainly some perks.
Absolutely, yeah. And it's good if there's a challenged economy. It's a good way for that economy to get rolling again. See, Greece the currency isn't lowering. So there's no advantage to going and traveling there or buying manufacturing out of Greece because they're stuck in the euro.
Yeah,
So,
exactly. Good to know. All right,
that's
good
it.
education today, Mark Bertoli. I feel smarter.
There you go.
We're going to take a quick break. Information on the screen for Abbott Wealth. We're back in 2 minutes. Stay with us.